Well, in case you hadn't heard, yesterday our good friends at the Fed raised the short-term interest rates by 0.75 percentage point, matching the increase at the previous two meetings. CBS News business analyst Jill Schlesinger joins us to explain what that means to us. That's what, the third? Now, this time the market went up a little bit. Explain why that happened.
Who knows? Yeah. I mean, market reaction to this is all nuts.
That's not the answer we were looking for, Jill.
I mean, honest to God, if anyone thinks they know how markets are going to move day to day, they are just full of it. So market reaction is really based on expectations, right? And we expected the Fed to raise the Fed funds rates by this 0.75 percentage point. Our range is 3 to 3.25%. I think what may have spooked some of the market participants yesterday afternoon was that the Fed said that they're not stopping. In other words, we've got high inflation, and there's two more meetings this year, and the Fed said we're going to do at least another 1.25 percentage points in 2022. They anticipate more increases in 2023. So just think about this, gang. Earlier this year in February, the Fed funds rate was 0 to 0.25%. It is likely going to be 4.5 to 4.6% next year. That's not a huge number in history, but the pace at which we got to that level is very, very stunning.
Now, what would you anticipate? Well, it's not fair to ask you this, but what would you anticipate that would do to the market?
You know what? If we go slow and sure and we're not tipping into a real economic slowdown, companies should do well. Like, what is the investment community scared of? Two things. One is that with higher interest rates, the cost of borrowing is increasing and companies don't make as much money. But you know what? If the Fed does not act, there's another risk, and that is that prices are really high and we consumers don't spend as much, and that will also negatively impact stocks. So you know what? Investors, they're so nuts. You know, I'm saying short term, not us. The long-term retirement investors like us, we're very smart. And we know that over the long term, if we keep doing what we're doing, it'll be okay.
A lot of this stuff is not unprecedented. If you sit tight and let the market recover, it will. It's just a matter of when. And like you said, anybody who tells you they know what's going to happen is totally full of it. Hey, there's a rumor going around that you have a book out. Is that right?
Next year, it's coming out.
Next year?
It's called The Great Money Reset. Next year, January. You can pre-order now. Here's the self-promotion of Jill. But, you know, I will say one thing that's interesting, and it kind of ties into this segment, and that it's called The Great Money Reset because I think that when people go through very traumatic times like the pandemic or any other trauma in your life, you reorder your life and you reorder it as part of your financial life as well. And I think that what has happened in the economy over the last 2.5 years is really a lot about us, about what we think is important. So when economists say, gosh, we're really surprised more people aren't working longer hours, there are a lot of people saying, you know what, kind of like staying home with my kids, I'll cut back on other things to let that happen.
Yeah. Dollar Jill, y'all. We love her, and you can see her regularly on CBS Mornings and the CBS Evening News with Norah O'Donnell. For more analysis, go to JillOnMoney.com. Thank you, Jill.